I think the one thing I would impart here is don't get caught up in shifting focus and faux focus. I mean, people start looking at the Fed and focusing on the Fed. The Fed's not an issue here. Fed's really out of this game primarily. And when they start looking at the Fed minutes and what the Fed, how many cuts we're going to get and all that, that's just smoke. Don't get caught up in that. And if the market gets caught up in that, fade it. I think that's number one. Number two, inflation. These numbers are going to be so distorted with front running the tariffs, and you can't really look at the statistical numbers that are being popped out here and apply any sort of relevance or merit to them. So don't pay attention to that either. And if the market starts to pay attention to that, fade that too. Those are really the way I'm playing it from here.
Yeah, so really the economic models that we've traded around in the past, the economic numbers, the unemployment numbers, the inflation numbers, the trade figures, and the responsibility of the Fed is all secondary now to political machinations and where
Yeah,
they go.
yeah.
It's all
It's,
political now. Hey everybody, welcome back to Markets and Madness. We like to say the place where we discuss the madness that occurs when economics, politics, and personalities all move in different directions. Tim and I here today. It's Monday morning. Stocks are getting smacked around again. We have another big sell-off, I guess, on the way. Good morning, Tim. How you doing today?
hey there, Fred. It feels like a Monday morning, doesn't it? If you look at that.
Yeah, it feels like an ugly Monday, yeah. Yeah, after a Black Friday in terms of stocks.
Yeah, that's true.
Yeah,
I noticed that Bitcoin is off another 2%. It's off 20% from the highs.
yeah, from just above 100, 101, 105, something like that, down to the low 80s. Yeah, that's 20%. I mean, volatility's there. That I'm seeing a lot of friends that I've had on the FX space and the and retail space moved into Bitcoin, and it seems that a lot more institutions are getting involved in Bitcoin, but the volatility is enormous. I mean, I don't know how you can trade that.
And look at gold is up 31.40 or something like that.
Yeah,
It's up big. The dollar's marginally down.
yeah.
Well, all those relationships are pretty wacky. You would figure with Bitcoin down, dollar firm. It's not the case.
Yeah, we're seeing gold up, dollar down, margin. I mean, the dollar is taking a backward seat now, I guess, until we really decide, really have an understanding of what the tariff situation is going to look like. Later this week, Wednesday, I think we're going to know more about the April 2nd drop dead date and all the points of retaliatory tariffs escalating one up on the other. I don't know where that's going to lead. It
The
doesn't.
dinosaur that I am, I bought some calls on a Swiss franc ETF. So I've been long
Right.
Swiss francs, equivalent long Swiss francs for about a week now. So I'm thinking the dollar's ready to cave.
Right. Has that moved at all?
Yeah, somewhat. I mean, I'm up a little bit, but marginally.
Yeah, I've been following the DXY, which is the dollar basket, and that's pretty stable for the most part. It's in the trading range. So we got to see. But I think you're right. I think once we know more about where these tariffs are driving us, we'll have a better idea of how bad this is going to look over the next 6 to 9 months.
Well, if anybody listened to us hiding out in bonds, we talked about that about 2 months ago. Get out of the market and hide out in bonds. That was really the play. You didn't have to
Yeah,
do much more than that.
I'm looking at TLT that was down at 86, 87 at one stage and 91, 92 now. So that's had a nice pop, four handles.
Yeah, these are, I guess, geopolitical moves in large part, you know,
What do
and
you think about housing?
down. I mean, you could get sucked in by looking at lower mortgage rates, but it's the whole scenario about the economy slowing down. I see, I see a significant piece of the working population either downsizing or pulling in their horns. I mean, let's face it. You work for the government right now. You still got a job. You're checking your email every morning to see
Right.
if you're getting doged. You're not going to go out and buy a house or a new car in that environment. So you're being more, I guess, cautious and not exuberant. It's just the opposite of irrational exuberance. It's,
Yeah.
it's caution. And
Anxiety-ridden caution.
then your friends get the doge, and maybe you get doged, and now the first guy that goes is your lawn guy, and you're thinking, do I really need, now that the kids are gone, do I really need this big house? Maybe I'm going to downsize.
Yeah.
So you got different sectors that are going to feel it. You know, the high end sector might be more vulnerable than the low end sector, but overall, it's not a good time to be aggressive. We still got to
Yeah.
get into this.
Yeah. I agree. I think housing is going to be a rough spot for the next year or two, you know. I think for the next year, because you think about it, I think we're going to be in this stock market downturn for the next 6 to 9 months, right? So we get to the end of this year, and now things start to look a little better. People are still going to be apprehensive about going out and getting have a big ticket spend on a big house. So I think it's going to take some time.
Well, yeah, I can't disagree with it. There's a lot of wild cards floating around in
Yeah.
this deck. When you turn one over, everything changes. But
Yeah, and I guess, later this week we'll know a lot more. I think this tariff story, what I was reading over the weekend is the market, the impression was that the market felt tariffs were under control and we knew where we were going. And then when he talked about, 25% tariff on automobiles built outside, and he's not um, changing, Trump's not changing from his original pact of April 2nd drop dead date, that people got a lot more skittish, a lot more nervous.
yeah, and for me, the tariffs are more of a wash than that. I don't really see the tariffs as this real ugly situation. I think you're going to get some good and some bad from it. But there's a wearing in period that we're going to see. I think net it's going to be fine.
And I read something about that the trade deficit, huge trade numbers over the last 2 months, is people trying to front load um, the tariffs, before they actually hit, buying everything they can. So we're running huge trade deficit. I don't remember the exact numbers, but they were like record
Yeah,
two
they're going to
months.
be distorted. They're going to be distorted. It's kind of a reverse J curve.
Yeah.
It's a perplexing time, and we were right. Just go hide out in bonds. It's a good time to. I mean, did you see gold this morning?
Yeah.
Gold is up 31.50. There's
1% move, right? It's a
some kind of
1%
short
move.
squeeze going on in gold. I got to think, and uh, I wonder if the audits are triggering this. Are we going to see an audit, a gold audit? Do we really
Could
have all
be.
the gold we said we had? Is it lent out, or some of it not coming back because of bankruptcies?
I, I I wouldn't argue with that, but I think it's the bigger problem to me. I wouldn't even say it's a problem, but the bigger cause is that people aren't comfortable with the U.S. If there's a wild card here, we don't know what this administration is going to do to foreign capital, how it's going to react. People are saying, "I'm just buying gold. I'm just buying gold."
I don't know. I can't just give it that. This is more than that. There's clearly a short squeeze happening someplace, and it's probably embedded in the mechanics of the market.
Yeah, I'm sure there was some options above 3,000 that clicked. A lot of people were short, selling the
Yeah.
upside,
Hmm.
and running short gamma above 3,000. I'm sure there's some of that. But I just think, we saw central bank buy-in for the last several years, and now I think they're accumulating a lot more. I
Yeah,
think
that kept a bit
here.
underneath, I think. And maybe some people took short positions at 3,000 and choking on them.
Yeah. You mentioned to me the other day the technology index. That's really getting sold off.
Yeah,
The VGT, was it?
yeah, the Vanguard Technology Index.
Yeah.
That's one of my stars. That
Yeah.
I got some Q puts, and I got puts. I'm basically looking at this as insurance. I'm
Hmm.
riding out for a couple of months,
Yeah. Yeah.
only because I didn't want to sell a lot of the technology stuff that I own. So I basically hedged it.
Yeah, I looked at VGT today, and I think there's going to be some opportunities down the road. You just got to pick your spots, and you got to be patient and wait. We were talking about Tesla the other day. Um, I don't see Tesla going bankrupt. I don't see this all hurting Tesla. Um, I like the idea of selling downside puts in order to capture some of the volatility and capture, basically, if you get put, that's where you want to own it. But I'd like to do it from lower levels. The 52-week range in Tesla, is it like 138 to 440 or something like that?
Yeah, right.
Yeah.
Yeah, those puts are pretty juicy. You're looking out at 3 month puts or something like that. And with your scenario, not looking at better economic activity till year end, you know, you could sell 6 month. You basically earn for 6 month puts. You could pick up big juicy premiums,
Right.
and if you hit, you're buying Tesla at a much lower level.
Yeah, I'm thinking if Tesla stock gets down to 200, 210, some 20 delta puts, you know, and I think that would be a good opportunity.
Yeah, I look at the juicier ones. I go like 40 delta, 35, 40 delta.
Yeah.
I like to use trade options like Rocky Marciano. Basically, I use them as a proxy for. But anyway, we're a good portion of the sell-off today, and it looks like this market's starting to make up its mind. Now we're in the
Yeah.
midst of the plunge. We're what, 12%, I guess.
Yeah. The fear that we were talking about in November and December. Um, every time we get these big sell-offs, we say, all right, this is it. This is it. We'll see if it comes back tomorrow. But I don't see it coming back this week at all. I think there's going to be too much event risk unless the picture changes, which which has happened, but unless the picture changes.
I think like you said earlier, there's so many wild cards in this deck that the play is volatility.
What about the situation with Canada? Like, seems like that's getting worse. The idea that the conservative might have gotten into power, it seems that's been pushed away now. This Carney is getting more and more of a strength.
Yeah, but there was something came out on Cooney. He had some bad news last week. I don't know. I really don't know about Canada. Canada's strange. I've always viewed Canada as if it's America light. You know, it's and
Doesn't seem to be that way now.
no, no, they've got their backup, and I fault Trump for that. I mean, it was needless. That whole 51st state thing was needless. Why goad them? But he does what he does.
Yeah, and Elon is getting a lot of pressure. Riots at every Tesla dealership around. You know, protests. I shouldn't say riots. I should say protests at every Tesla dealership.
Yeah,
I don't
but
know what approved.
they're doing the right thing there. I mean, Elon is doing a lot of interviews, and everybody at the interviews are wearing ties. They're all staid. They look like solid citizens, and I think they're going to win that war when you really start to see the savings. I mean, you, people in their right minds can't really object to eliminating some of these things, waste and abuse. I mean, hundreds, how many millions of people? There are more credit cards in the government than there are people in the
Yeah.
What's that
More
about?
people to fix and work on computers than there are people.
Yeah,
Right. Than there are regular staff. I saw that one. That was a fascinating article. Some very serious people in that whole Doge plan. Guy who was the original partner of Airbnb, another guy who owned 5 businesses in
yeah.
Texas. Very serious people.
I gave my talk the other day, and one of the guys on the blue page, one of the Democratic guys said he was saying, well, look at what they're cutting and blah blah blah, and these people really need. I said, well, I don't know. I don't know that that's an argument. And nobody's saying we shouldn't provide these services. We just provide them more efficiently and cut out some of the waste. I said, look, he said, well, how much waste could there be? I said, how much waste could there be? I mean, you work for small companies and big companies. You work for a small company, they look at every paperclip. You work for a bigger company, there's a closet full of boxes with paper clips. You work for the government, there's a warehouse full of paper clips.
Yeah.
We got to cut that. You got that needs to be reined in somewhat. And just finding out how many people are actually real as opposed to just names. And when I watched Musk the other day, he said, this 9-month-old kid is getting a loan from SBA because he got a bogus Social Security number. And the systems don't talk to each other.
That's fascinating.
You
Yeah.
can't validate anything. And one guy, I guess it was you told me he was big balls. He was wearing a black golf shirt, looked ran a software company on his own, is donating his time. And he said, I asked people, what's the system doing? They shrug their shoulders. They don't know. And it's $15 billion over budget, and it's 30 years late. How can you? What kind?
Survey for the Department of Interior that cost them $985 million. They says could have got Survey Monkey, could have done it for 10 grand. $985 million. They had no use for the survey whatsoever. Went to a dead office, so they didn't even use it.
I mean, I worked for a couple of consulting companies over the years. Getting a consultant in, a big name consultant, is a big number. And these guys are just living off, you know. You talk about 30 years. I mean, they start a system in 1995 and it's 2025 and it's still not here. And it's $15 billion over budget. There's something wrong with that picture. And I don't care how affluent a society you are, you can't afford that. So
Right.
it's hard to really argue with that, but they do. They argue about it, and they're torching Teslas, and these people are out of ideas.
We saw a bumper sticker the other day. Um, Anti-Trump Tesla. It says
Yeah, right.
anti-Trump Tesla. Like, don't key me, don't firebomb me. I'm one of you.
But this comparison to Nazis, that's the one that gets me. I mean, have you not haven't you seen a movie, a documentary? I mean, Nazis, Jesus Christ. I mean, to think that, to just throw that term around as if it's in any way, just they treat it as if it's just a disparaging remark. I don't know. Maybe it's Monday morning and maybe I'm getting a little too introspective, but I don't know. Anyway,
Yeah,
don't know
I
what to say.
agree. And I think, buying Tesla stock is going to be a big win if you've got the timing. We've talked about timing a number of times. Um, and I think if you're looking a year or two out, it's going to be a great opportunity. You just might have
Well,
better levels to do it.
I think we're doing it the right way, writing the puts, picking up the premium and catching the thing lower down. That's
Hmm.
uh, that's a good way, and the timing is probably good for that now. You know,
Yeah, yeah.
those premiums are very juicy.
Where do you see the Dow going to? Just to pick a number, or
Oh, I,
is it another 10%, another 20%? Is that possible over the next 3 to 6 months?
Well, is it possible? You use the term event risk. So yeah, it's possible. Um, First of all, peace breaking out in Ukraine. I think some of the sell-off is over this, is the diminishing optimism about peace in Ukraine. That's got to be hitting this market to some level, and that could turn around in an hour. Um,
And we also
Israel,
have the problems with Iran, right? I mean, there's potential war talks, bombing.
I think
Going
that's behind the goal move, to tell you the truth. I think there, I mean, he's making it very clear that uh, if Iran doesn't budge, we're going to do something, and that's going to hit crude oil. Crude oil could really take off here.
Yeah, I've got some XLA, and that's been rallying too. And rallying in the face of recession, a lot of people are scratching their head, but I think
These are
you're right.
wild, these are wild cards. I mean, he's just put another aircraft carrier in the Gulf. You got Israel saying to Hamas, release the hostages, and Hamas looks like they're caving in on that now. Israel has put their foot on the gas. I I would like to see Saudi Arabia step in here and say, but that's conjecture on my part. I think Trump is working behind the scenes trying to bring Saudi Arabia and Israel closer, to use them as keeping Iran in check in the Middle East. Saudi Arabia is afraid of Iran.
Well, they're enemies.
Yeah,
Yeah, they're enemies. So I don't know if it would I don't know if it would keep Iran away, but I guess teaming up with Israel would show a unified force there in the Middle East.
yeah. Stranger things have happened, and basically he's resurrecting the Camp David Accord.
Well, the Trump 1.0 was the Abraham Accord, right? Where he had
Did I say Camp David? I meant Abraham.
yeah, he had El Al flights going into Arab territories, right? And, yeah,
So I really think geostrategically, he's dividing the world. He's redividing the world into these defense zones. And the one for us would include Canada and Greenland and Panama and probably South America. And he's looking for a regional partner. Uh, Basically, he's saying, we'll be on the bench, but you guys take care of the skirmishes. So in the Middle East, I think he'd like to see Israel and Saudi Arabia. I think in Europe, he'd like to see NATO step up and do its own thing. From Greenland south into the southern tip of Latin America, I think he's that's our zone as his primary. In Asia, Japan, he's bolstering Japan now in defense. Probably Australia is part of that. So he's got this world redesigned, and he's got Hegseth redesigning the military for those theaters. He's got each theater laid out, and China could change that with Taiwan. Again, event risk. That's the word.
yeah. So being long volatility is the play, and I think being long volatility and trading the volatility is where you got to go. If the market's down 5%, you you cover some of your delta, and then the next time it pops, you're traded out.
Yeah, that may
Become
be
a volatility
the
trader.
play with a lot of the stuff that I own, particularly today.
Yeah, take
All
some
right.
profit on the underlying. That's all.
Well, I don't know how much we've cleared things up today, but
No, it's getting murkier and murkier as we go forward. But hopefully by Wednesday we'll have a better idea of really where how negative this can be, or if there's a possibility that it turns positive.
I think the one thing I would impart here is don't get caught up in shifting focus and faux focus. I mean, people start looking at the Fed and focusing on the Fed. The Fed's not an issue here.
Yeah,
Fed's really out of this game primarily. And when they start looking at the Fed minutes and what the Fed, how many cuts we're going to get and all that, that's just smoke. Don't get caught up in that. And if the market gets caught up in that, fade it.
right.
I think that's number one. Number two, inflation. these numbers are going to be so distorted with front running the tariffs, and you can't really look at the statistical numbers that are being popped out here and apply any sort of relevance or merit to them. So don't pay attention to that either. And if the market starts to pay attention to that, fade that too. Those are really the way I'm playing it from here.
Yeah, so really the economic models that we've traded around in the past, the economic numbers, the unemployment numbers, the inflation numbers, the trade figures, and the responsibility of the Fed is all secondary now to political machinations and where
Yeah,
they go.
yeah.
It's all
This,
political now.
this is a structural change in the nature of the economy and the workforce and the cash flows. Just look at it this way. What would you rather have? Would you rather have an economy that's driven by government spending, which requires borrowing or printing to finance that spending? Or would you have risk takers stepping in because of better tax policy and risking their money as opposed to risking your money or the government's money? And we're going there, but it's going to take some doing to get there. We've been living off this sugar high of government spending for so long now, that we think that's the norm. We got literally generations of people that think that's the way an economy should run. Government should spend the money. So we're going from Keynes to to Friedman or Laffer. You know, we're moving in that direction. So
Yeah, I can't argue with that. We've talked about it a number of times. The pain, front load the pain, and it's I think we're starting to approach that waterfall, you know, right now. We've been talking about it for the last month that yeah, we're here, we're here. I don't know if we're in the pain zone yet, but I think we're awful close.
well, usually if you're in the pain zone, you know it. You know, and a 20% move down from the highs based on the rally we've seen for the last 2 or 3 years can be regarded as a correction.
Right. There's a lot of people that are still whistling past it, don't recognize it, don't appreciate it. And a lot of people that bought in after the election that were all pumped up. U.S. the money's going to flow in. We're going to see great opportunities. I don't think the average investor is prepared to look at his 401k and see it down 25%.
I don't think we've seen my watermelon scenario yet. You know that scenario? I owe you $1 million and I don't have it. So I show up at your house and I don't have the money, but I got a truck full of watermelons. What's just happened to the price of watermelons?
On way
You
down.
don't want watermelons. You want money. You're going to liquidate the watermelons. You don't care if they're worth $2. You get $1.20 for them. You unload the truck full of watermelons. Well, there's so many stocks out there that are basically watermelons, that are good stocks that people own and say, well, this is a great stock. And when we reach the margin calls and they have to liquidate those stocks, because now you're out of watermelons. So you got perfectly good, you know, broccoli position. So you're going to unload that too. Even though you know broccoli's a buy, you don't care. You got to raise some money because you're underwater because you bought on margin. And the real question that nobody can answer is how leveraged was this market? Was it over leveraged? I got to think it might have been.
See, I'm not even looking at the leverage portion of it, although, there was a lot of leverage out there. I'm looking at the guy who's been looking at his 401k go up by 15% a year for the last 3, 4 years. This is bulletproof. This is bulletproof. And now he's relying on that. And all of a sudden, if it stops going up 15% and goes down 15 or 20%, how is he going to feel internally? He's not prepared for that risk. The stock market, the equity markets have been a one-way bet for 5 years now, 6 years now. It's longer than that. Since 2019. So now, if you do have that two-way risk come back into the market, I don't know how people are going to stomach that.
Well, the real sharp moves are usually a result of shifts in leverage. You know,
Yeah.
we're in a market now. The makeup of the market is the tail wags the dogs market. The derivatives, the options, the ETFs, they drive stock prices.
Hmm.
It used to be the other way. It's not that way anymore. It hasn't been that way for literally years, decades probably. So the options positions and the derivative positions, the futures positions, that's the first leg. And that's the highly leveraged leg.
That's a good point.
Yeah. So the highly leveraged leg is unwinding right now. And the question that we can't answer is, have you seen the flow into the underlying yet? And that's your 401k guy. 401k guy, he's not long options. He's long underlying. He's got the stock and that stock, and he's holding it for the long term. So that's what I meant when I say the tail wags the dog. The leverage is the first move, the leverage markets. So the derivative markets, the futures and options markets are the first move. And then the equity, the long-term buy and hold equity holders. I've got this portfolio. It's gone up. Those guys, they're 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 starting to feel the pain now, I think.
Yeah. They felt that they've been insulated for a long time. We were reading the other day, the guy mentioned, they bought a stock at 20, it goes up to 80. It looks toppish, you're going to sell. No, I bought it at 20, I don't have to sell. All of a sudden it's at 60. You're
Yeah,
going to sell? Well, I bought it at 20. All of a sudden it's at 40. Oh shit, I got to get out.
right.
So, so I think we're getting close there.
And the people that bought the falling knife, those are leveraged people because they stepped in and said, okay, it's a buy and hold. It's a dip, buy the dip. I'm buying the dip. I'm buying the dip. And then they're choking on the dip now. The first position was bad enough. The second position is hurting them right now. If you've been playing for a 10% sell off and you've seen it and you got long, now you're looking at this going, are we going another 10%? Okay,
All
that's it
right.
for me.
Good chat. All right, Tim, have a great afternoon.
Okay, talk to you tomorrow.
Cheers. Bye.